Good morning, everyone, and welcome to Ainsley News. It's a Tuesday, so we've got some crypto news for you today. Did the crypto market price in the worst? Global markets have faced a very sobering week as armed conflicts break out between Russia and Ukraine, as a global macro asset, and with markets that never close. The price of Bitcoin was quite volatile in response. This week, the market traded down to a low of 34,474 before rapidly recovering to a high of 44,200 this morning. Having now been in a drawdown from the November all-time high for 138 days, the conviction of many Bitcoin investors, mostly those who bought near the top, has been significantly challenged this week. In this edition, we will analyze what looks like a flush out of top buyers and draw comparisons between the current market structure and the May-July 2021 period. What we will observe is that top buyers have almost completely capitulated now. However, the remaining distribution of holders appears to be of a far higher resolution, arguably reflecting the unwavering conviction of the buyers of the last resort, Bitcoin, HODLERS. Starting with the May-July period, the coin distribution was skewed to be the very top-heavy, with a large proportion of the coin supply held between 54k and 60k. Whilst this showed a degree of demand at higher prices, it also made for a fragile market with many top buyers who would be sensitive to any major price correction. You see an image now on your screen. Very top-heavy market prior to May sell-off. What eventuated was a major market capitulation. Both spot and derivative markets were flushed of all hype. The on-chain activity on the Bitcoin network collapsed, and it can be reasonably argued that it was the start of the present bear market. During this 2.5 months long period of consolidation, a great deal of supply was transferred by top buyers into exchanges for sale. This supply was then gradually soaked up by higher conviction buyers, with the cost bases of these coins becoming more heavily weighed between the 29k to 40k price range. This behavior describes a broad-scale weak hand to strong hand redistribution event. Moving to the present market correction, we can see a remarkably even distribution of the coin supply was established during the rally from July 2021 into the November all-time high. This distribution indicates the following. Many investors who accumulated the May-July correction took profits on the way back up. This created volume nodes around 35k, 47k, and 62k. Buyers saw value and entered the market throughout the August to November rally. This is despite on-chain activity indicating that the majority of market tourists had left and only the hodlers remained. You see an image now on your screen. Fairly even supply distribution at November all-time high. Top buyers may have been already capitulated. The news events of this week are world-changing. If there was a time that Bitcoin investors would capitulate, especially those who see it as a risk-on asset, the breakout of the war would be a likely catalyst. However, the degree of on-chain capitulation that occurred during this week's sell-off was lackluster, to say the least. It exhibits similar characteristics to the 20 July 2021 sell-off to 29k. 0.3 below, you'll see that in an image coming up soon, which simply didn't have the bearish follow-through to break prices down to new lows. This week saw a net realized loss of 713 million, which is significantly less than the 2+ billion capitulation events experienced earlier in the correction. And here's that image I was referring to, Bitcoin net realized profit and loss. With top buyers largely flushed out of the network and evidence it is a hodlers dominated market, we will close out with 3 charts that help describe what this long time horizon cohort may be doing. First up is liquid supply, which tracks the volume of coins held in wallets with little to no history of spending. These often represent cold storage and the wallets of hodlers who withdraw religiously whilst undertaking a dollar cost average style strategy. As a proportion of circulating supply, Illiquid supply has surpassed the May 2021 peak, reaching 76.3%. This has now returned to the same level as the 2017 market top, reversing a 4-year-long increase in coin wallet liquidity. Note, however, that both of these instances preceded major sell-off events, and thus it remains to be seen if these coins are truly in cold storage. You see an image now on your screen, liquid supply as percentage of circulating. The current market is extremely interesting from both an on-chain and a macro perspective. Given the enormous magnitude of uncertainty and risks that a kinetic conflict introduces, must be prudent with an expectation of further de-risking, investor panic, and capitulation events. So far, however, we have not seen a widespread capitulation event, with exception of very short-term holders who purchased the all-time high or premature dips during this drawdown. Despite this very uncertain macro and geopolitical backdrop, the behavior of Bitcoin hodlers maintains a remarkably bullish conviction. Coins continue to be withdrawn from exchanges, are moving into increasingly illiquid wallets, and are maturing into increasingly senior age bands at a high rate. These look like long-term holders, coins in the making. It is now key to watch in case these cohort trends begin to reverse, which may signal broad-scale loss of confidence. However, instead of such a reversal, these observations continue to paint a favorable and constructive future for Bitcoin somewhere over the horizon. And that's news for today, everyone. Hope you enjoyed it. For any Bitcoin or cryptocurrencies, please visit ainsleywealth.com.au. And for any metals like gold or silver, please visit ainsleyBullion.com.au. And I'll see you again tomorrow. Bye.